You know, despite this sort of feeling of hysteria in today's session, stocks just barely in the red and off the lows of the session. You can see NASDAQ is actually higher. This as we head into the final hour of trading. Technology coming into focus, particularly tonight. You got NVIDIA. They're going to report out to the bell. I want to bring Scott Martin back. Scott, first let's start with this session. You know, I think this session is pretty interesting, particularly if there's a way NASDAQ can finish higher. It was just down 7 points a moment ago, down 230 at the worst part of the day. The ability for the market to shake off bad news has been one of the hallmarks of this leg higher. What does it say? What does it mean?
Yeah, it looks pretty good. I mean, Charles, what a difference a couple months make, right? I mean, you had any of this data or any of these rumors out of D.C. or whatnot going on 30, 60 days ago, this would be a major problem. So the market's in a different psychological state, which is good. You mentioned NVIDIA on the lead there. I mean, we've already had a pre-announcement from NVIDIA, which sunk the stock down to levels where we picked up some more. Now NVIDIA is trading, you know, back to kind of where it was back before this big tech wreck. So I'll tell you, NVIDIA is an interesting name here, given the news they're going to give after the bell, as are some of the other tech companies that have guided lower or maybe put in some trepidation in the comments, but have bounced off that news too.
Yeah, and to your point, the number one performer right now in the communication services is Electronic Arts. Completely smashed the smithereens after their earnings report. Of course, they've had some good news since then with the release of that Apex game. But then there's Netflix. On the Christmas Eve, it was $233 a share. Now it's $358 a share. I mean, is that why investors, no matter what, continue either to hold these big momentum names or flock back to them on every dip?
Yeah, I think flocking on every dip is really well put. I think that's what you have to do. And you stay with some of the good names. I mean, just because Google and Facebook had some struggles in Q4 doesn't mean I think you have to run from them. In fact, what we've done is we've started to add to those names. And believe me, it's not easy to do that. I mean, it's not easy to not to say that we bought on Christmas Eve, but it's not easy to jump into some of those names as we did in, say, early January. But you have to believe in the long-term viability of those companies. You know the market is overreacting, factoring in probably worse than expected news on a lot of these names because it was in a psychological bad news mood. So you have to look at those opportunities as ways to add stock if you believe in the company long-term, and we do. You
know, Scott, right before the show, Citigroup switched their internet rankings, and they said, okay, Amazon no longer our top pick. Their new top pick is Google. They say strong growth at mobile and YouTube. Secondly, they like Netflix. They've elevated that to number 2. But Amazon, now they say, you know what, e-commerce regulations, and they pointed to Jeff Bezos, his personal issues. You know, we've got less than 20 seconds, but how much of that kind of stuff do you factor into your work?
Yeah, usually that stuff's the kiss of death. So if they're moving stuff down, I'm moving it up in my list. And so to me, if that hits Amazon anymore, Charles, I'm a buyer. And we already own some, too.
Would you be surprised if the Dow finished the session in the green?
No, I'd be looking at volume, though. You know, look at volume the next 2 days as we come into a holiday weekend in technical land.
Scott Martin, thank you very much, folks. Market resolve has been the key. Liz Clayman, you know what? They find a way to get off the lows every single day.
Well, I know. We're watching this so closely because, yeah, Charles, you're right. It looks like Wall Street's making this sort of mighty effort to turn it around. Just a few hours ago, the Dow was down 235 points. Look at it now, down just 48. As investors justify bad economic numbers we got this morning as an incentive for the Fed to hold off on rate hikes, they found the silver lining. So there, you have the S&P 500. It tried to turn positive less than 15 minutes ago. It's just slightly down right now, less than 2 points lower. The Nasdaq up 17 points. Meanwhile, Amazon breaking up with the Big Apple this Valentine's Day. Terrible timing, Valentine's Day. The tech giant has officially ditched its plans for that new headquarters in Queens after local opposition shouted the e-tailer down and then out. The repercussions already being felt at this hour. The New York real estate agent who says his clients were lining up to build and improve Queens. Now they're crying in their beer, but perhaps it's the residents, he says, who are the ones who should be sobbing. It's a Fox Business exclusive. And Team Trump in Beijing just hours away from facing the ultimate decider on the Chinese side, President Xi Jinping. But there's one issue that could ultimately destroy this trade deal. We'll tell you what's developing right now. Plus, famed market guru Byron Wien of Blackstone in his first interview since he sent his clients his annual 2019 investment surprises. You will only get them here for free. You don't even have to be his client. And Heart Health meets big tech as we introduce you to the Cardiogram co-founder who could save your life and even the ones you love, and all it might take is his app on your wearable. And Coca-Cola shares worse than flat, on pace for the largest percentage decrease in 11 years. We're less than an hour to the closing bell. You're in the right place. Let's start the countdown. Breaking news. We are told that at any moment, at any minute, we are expecting the Senate to start voting on the border budget deal. This is Chuck Grassley right now. He, of course, is talking about the border wall. We understand we're monitoring this. The minute the sort of yays and nays begin, we will let you know how it's going down. Now, the House is expected to vote on it tonight, and if it passes, the bill then hits the president's desk. So we've got a nail biter on our hands because we still do not have clarity on whether the president will sign it. The deadline to avert a government shutdown, midnight tomorrow. Let's get to the markets here. In the meantime, the Nasdaq has kind of poked its nose out of the bear cave. Question is, will the rest of its body emerge by the closing bell? So once again, I'll tell you what I told you yesterday. The index needs to close above 7,431.50. Right now we're at 7,438. Right? So we're just right around there, and that needs to be at that previous level to officially risen 20% off its low, hit back on December 24th when it first entered this most recent bear market. No cave dwelling for Cisco Systems. Look at this. It's basking in the sun on its best day in a month. The network equipment giant jumping about 2 2/3%. It just beat on quarterly earnings, and that makes 8 straight quarters of wins on both the top and the bottom line, EPS and revenue. Cisco also boosted its share buyback program by $15 billion and hiked its quarterly dividend by 6%. Will a potential U.S. ban on Chinese telecom equipment makers add rocket fuel to Cisco shares because they're in competition? That's coming up. As I said, Cisco climbing $1.25 to $48.76. Okay, next. This stock's goose isn't exactly cooked, but is getting a little dry. Canada Goose on pace for its largest percentage loss in more than a year, down 12% at this hour. Even though the company behind those $1,000 parkas did give stronger than expected guidance for full-year revenue, Canada Goose had to blame a dip in profits on higher labor costs in Canada and on investments to expand overseas that the company has made. Overseas, you may remember, the retailer just opened its first store in mainland China 2 months ago and is targeting about 20 brick-and-mortar stores around the world by 2020. While Canada Goose expands, Amazon's pulling out. No compromise, no meat in the middle. Amazon went for the jugular and, in a stunning decision, dropped its plans to build new headquarters in New York City. Mixed reaction pouring in from all corners of business and government. Freshman firebrand Alexandra Ocasio-Cortez tweeting, quote, "Anything is possible. Today was a day of a group of dedicated everyday New Yorkers and their neighbors defeated Amazon's corporate greed, its worker exploitation, and the power of the richest man in the world." That would be Jeff Bezos. After the cancellation announcement, Amazon issued the statement saying, quote, "A number of state and local politicians have made it clear that they oppose our presence and will not work with us to build the type of relationships that are required to go forward with the project we and many others envisioned in Long Island City." Those repercussions being felt at this hour. That's why we have Jason Haber here. He is a real estate broker with Warburg Realty. He has several clients that were looking and about to make significant investments in that area because of Amazon coming in.
Well, it's not just Amazon. It's everything that's happening in Long Island City. The good news is, if there is a silver lining, all the fundamentals behind why Amazon wanted to go there in the first place, they're still there. A lot of growth. However, no one likes a Valentine's Day breakup, but that's what we have here.
What was your gut reaction when you heard?
Well, I think they threw out the baby with the bathwater. The mayor had an opportunity here to sell this over the last few weeks. He never did. Yeah, I think he was too busy trying to run for president.
You know, he just threw Amazon under the bus, saying it was Amazon that wouldn't work with local.
Look, at the end of the day, they never sold this to the stakeholders and to the people of the city of New York. By the way, most of them wanted Amazon here. And certainly this could have been worked out. It's a tragic loss.
Yeah, so he basically blasted Amazon. He said Amazon had the opportunity to be a good neighbor, do business in the greatest city in the world. Instead, they threw away that opportunity.
You know what's interesting, Liz? 100 years ago, Standard Oil moved to New York from Ohio. And when they came here, the economy of New York took off at the first half of the 20th century. And then other businesses soon followed. We want the Rockefellers and the Carnegies and the Bezos. We want those businesses on our shores here. And now we've lost that opportunity.
I completely agree. I think that it is a missed opportunity because the average salary of the 25,000 workers who would have come here was more than $100,000. But I do want to just ask you about your clients. What had they planned?
Well, we had people who have been, and will continue still to look at investments both in the residential space and also in the commercial space.
Have you heard from them?
Yeah, I mean, we're trying to understand what's happening. Obviously, this just happened. The key for them are the fundamentals that are happening right there in Long Island City. The reasons Amazon went there are still in place.
I know,
we're trying to reinforce that.
Come on.
Well, without Amazon, it obviously is a different boost, but you still have all the good things in Long Island City. All the investment is still there and in place. Let
me play devil's advocate, which is hard because I'm on Amazon's side about this, and I think it is a huge mistake to have chased them away. But the complaint is that they got billions in tax breaks, and eventually when they move in, the worry is that you will, in essence, have crumbling transportation that isn't addressed, and you will have housing that is unaffordable.
Right. Well, first, the net in terms of infusion of cash is far beyond the tax subsidies that we're going to be given to Amazon. Secondly, it's called planning. Like, if you're trying to build a city for the 21st century so it's going to be successful, you take the biggest company in the world, you have them invest here, and then you couple that with